Today we're digging into Amazon's latest numbers, specifically their Form 10Q for the quarter that ended March 31st, 2025. Look, we know you don't want to wade through pages of financial statements, so our job here is to pull out what really matters if you're thinking about Amazon's stock. We want to find the core insights, into Amazon's financial engine. We'll hit everything from cash flow to what management's saying. Okay, let's get right into it. What does this report tell us about where Amazon might be heading?
Exactly. And this isn't just looking backward, right? It's kind of a hint about the future, about Amazon's trajectory, and ultimately what it means for investors. By really looking at the cash flows, profitability, the balance sheet, you start to see the currents underneath the valuation. And the management discussion part, that's often gold, it gives you their strategic thinking, which is key for the long term.
So let's jump straight to the big picture then. What were your first impressions from the overall financial performance, especially thinking like an investor?
Well, the headline numbers, they immediately tell a story. It's one of continued scale, but also improving profitability. Net sales hit $155.7 billion for the quarter. That's a solid 9% jump from the $143.3 billion they did in the same quarter last year.
9%. For a company that big, that's
Yeah.
pretty solid growth. Definitely something investors notice.
Oh, absolutely. A revenue expansion at that scale is noteworthy.
And it wasn't just the top line, the sales, right? I saw the profit increase look pretty significant too. That's always key for the share price outlook.
Yeah, absolutely. And net income really jumped out. It leaped to $17.1 billion in Q1 2025. That's a substantial surge from the $10.4 billion they reported back in Q1 2024.
Yeah.
For investors, that kind of bottom line improvement, it signals, maybe better efficiency, maybe stronger pricing power, or maybe just a good shift in their business mix. All good things for the stock.
Okay. And how did that work out for earnings per share? Because that's often the number people really focus on.
Right, the EPS. So diluted earnings per share ticked up to 10.793 cents in Q1 2025. That compares to 10.677 cents in Q1 2024.
Okay, so a smaller jump there compared to the overall net income.
Well, yeah, the percentage increase looks more modest, but remember, EPS accounts for all the shares out there. So even a slight rise per share for a giant like Amazon, it still indicates healthy earnings power. And that's fundamental for attracting investors.
Got it. Okay, solid overview. Now let's break down the different parts of the business, the segments: North America, International, and AWS. How are these different engines contributing to the growth outlook? What should investors be watching there?
Right. This is where you see let's say, the different flavors in Amazon's growth. North America, it showed steady progress. Net sales were up to $92.9 billion from $86.3 billion last year. That's an 8% increase. And operating income climbed, too, from $5 billion to $5.8 billion. So, a stable, expanding core market.
Okay, stable and growing there. What about international? That can sometimes be more unpredictable, right? Global economy stuff.
You're right, it can be. International net sales grew to $33.5 billion, up from $31.9 billion. That's about a 5% increase. Operating income also nudged up slightly from $7.9 billion to $1.0 billion.
10%.
Yeah, more moderate growth. And that could be, like you said, currency effects, maybe regional economic differences. It's something investors definitely factor into their global view of Amazon.
Okay, which brings us to the big one, the cloud juggernaut.
Yeah.
AWS, Amazon Web Services.
Yeah.
Investors always seem laser focused on this part. What's the story there from the 10Q?
Well, AWS is just continuing its, frankly, impressive run. It's really cementing itself as a massive growth engine and profit center. Net sales soared to $29.3 billion in Q1 2025. That's a huge 17% jump from $25.0 billion in Q1 2024.
17%.
Yeah, and maybe even more importantly, operating income surged. It climbed from $9.4 billion to $11.5 billion. That kind of performance in cloud. It's a powerful signal for investors about Amazon's lead in a super high growth area and just its ability to make serious profit there.
So you've got these different speeds, right? So it's solid 8% in North America, a slower 5% internationally, and then this powerhouse 17% for AWS.
Yeah.
What's the takeaway for someone looking at the stock?
Well, what's really fascinating and frankly crucial for investors is seeing that clear difference in pace. The strong momentum in AWS with that high growth and all that operating income, it's increasingly looking like the primary driver for Amazon's future growth and profit.
Right.
So while retail is obviously still huge, AWS's performance really highlights how Amazon's successfully diversified into these, higher margin, tech-driven areas. That's a big part of the investment appeal.
Makes sense.
Yeah.
Okay, beyond just the segments, let's look at the specific revenue streams. Like, where exactly is the money coming from? Online stores, ads, subscriptions. What does that tell us about maybe the stability or diversification for investors.
Yeah, looking at that breakdown by product and service, it gives you a much deeper feel for how Amazon's business model is evolving. And you definitely see strong growth in areas beyond just, selling stuff online. Take advertising services. That brought in $13.9 billion in Q1 2025. That's up quite a bit from $11.8 billion in Q1 24.
That's significant growth in advertising.
It is. It shows their ad platform is becoming a really substantial and likely high-margin revenue source. And of course, like we just talked about, AWS keeps climbing strongly. Seeing these diverse, often higher-margin services contribute more, that can signal greater revenue stability and maybe better long-term growth potential to investors.
So the fact that advertising is growing fast and cloud keeps dominating, you could read those as pretty positive signs for the stock's future potential, less reliance on just retail margins.
Precisely. These areas are like major growth levers. I mean, don't get me wrong, the online stores are still the core, $57.4 billion in Q1 2025, up from $54.6 billion. But the faster growth in these other segments suggests, a successful strategy, broadening the base, tapping into new high-growth markets. That looks good for a long-term investment.
Okay, let's flip to the other side then, the costs. The 10Q breaks down operating expenses.
Yeah.
What trends jumped out at you there? What should investors watch regarding efficiency or future investments?
Right. Analyzing expenses is critical. It shows how well they manage money and where they're placing their bets. One area that really stands out is technology and infrastructure. It saw a 13% year-over-year increase.
13%. That's quite a jump.
It is, and it lines up directly with that strong AWS growth we saw. It signals they're continuing to invest heavily in their cloud infrastructure.
And how would investors typically view that as a necessary cost of growth?
Generally, yes. For investors, this is usually seen as positive. These investments are pretty crucial for staying competitive and supporting future growth, especially in tech.
Makes sense. What about fulfillment costs? Obviously, with more sales, those go up. Do they keep pace or?
Fulfillment costs went up by 10% year over year.
Okay, so slightly faster than the overall 9% sales growth.
Yeah, slightly faster. Investors will definitely keep an eye on that relationship. You don't want fulfillment costs eating too much into profit gains. Some increase is expected, obviously, with higher volumes, but Amazon's always talking about optimizing logistics, and that's key for keeping margins healthy.
Okay, let's shift to cash flow and liquidity, often seen as a kind of real measure of financial health. How's Amazon doing on generating cash?
They continue to be a cash-generating machine from their main operations. Net cash from operating activities, looking at the trailing 12 months ending March 31st, 2025, hit $113.9 billion. That's up nicely from $99.1 billion in the prior year period. So the fundamental business is still great at turning sales into cash.
Okay, operating cash flow up. But I noticed the free cash flow number actually went down. Can you unpack that? How should investors think about that apparent contradiction?
Ah, yes. That's a really critical point. Free cash flow for the same 12-month period was $25.9 billion. That is down significantly from $50.1 billion the previous year.
Why the big drop?
The main reason, a huge surge in purchases of property and equipment capital expenditures, or CapEx. That number jumped to $88.0 billion in the 2025 period, way up from $49.0 billion in 2024.
$88 billion in CapEx. Where's that money going?
It's largely going into expanding that technology infrastructure, especially for AWS, and also building out their fulfillment network even further.
So a drop in free cash flow sounds bad on the surface, but here it seems directly tied to pouring money back into the business for growth. How should investors weigh that?
This is really where understanding Amazon's long game is key. If you're an investor with a long-term view, these kinds of strategic investments in crucial growth areas, cloud, logistics, they're often seen favorably, even if it temporarily lowers free cash flow.
Right. Betting on the future.
Exactly. It shows commitment to expansion and staying ahead. But, if you're more focused on short-term returns, that lower free cash flow might be a bit more concerning. Less cash right now for dividends or buybacks, potentially.
And even with all this spending, what does their overall cash position look like? Are they still sitting on a lot of cash?
Oh, yeah. Their liquidity is still very strong. As of March 31st, 2025, they had $94.6 billion in cash equivalents, and marketable securities.
Okay.
It's a bit down from the end of 2024 that was $101.2 billion. But $94.6 billion is still a massive cushion, gives them tons of flexibility.
Another thing that caught my eye in the report was a big jump in equity investments. What's that about? What does it signal about their strategy beyond just AWS and retail.
Yeah, that was really interesting. Their equity investments in private companies, the ones not using the equity method, they just exploded. Went from under a billion, like $989 million at the end of 2024, up to $6.1 billion by the end of March 2025.
6 billion. That's a huge increase in one quarter.
It really is. It suggests they're getting maybe more proactive about finding and funding early stage companies that could be disruptive or fit strategically.
And there were also those big investments in convertible notes and preferred stock, specifically mentioning Anthropic. How should investors read those kinds of bets?
Right. Those investments had a fair value of around $13.8 billion at the end of March. And yeah, the big one there is Anthropic. It really highlights Amazon's focus on key emerging tech, like generative AI.
Makes sense.
And the fact that they converted some notes and booked a gain, that shows the potential for real financial returns down the road. These kinds of strategic bets could keep Amazon at the forefront and be, long-term value drivers for investors.
Oh, and they also mentioned $1.9 billion in equity warrants, which is another way they gain potential stakes in promising companies.
So these investments aren't just side bets, they're potentially significant indicators of future growth direction and value creation. Exactly. It shows they're willing to deploy capital strategically into innovation. That can be a crucial factor for long-term success and, ultimately influence how investors value the company as these things play out.
Okay, let's quickly touch on debt. Any red flags or points of interest there?
Well, total long-term debt was about $53.4 billion as of March 31st.
Which is a lot of money, but for Amazon.
Right, context is key. It's also important that they have access to big, unused credit lines and commercial paper programs. They weren't borrowing under those at the end of the quarter, so it indicates they have plenty of financial flexibility and aren't currently stretched thin on short-term borrowing.
Okay, and what about shareholder equity? Any signals about returning value to shareholders, buybacks, anything like that?
The report notes they still have $6.1 billion authorized for stock repurchases as of March 31st.
But they didn't actually buy back any stock in Q1.
Correct. No repurchases in the quarter. But having that authorization still in place gives them the option, maybe, to support the share price later. Also, stock-based compensation expense actually went down from $5.0 billion in Q1 last year to $3.7 billion this Q1. Investors might see that positively, as it means less potential dilution of their shares.
All right, looking forward now. Amazon gave some guidance for Q2 2025. What are they expecting in the near term? What should investors anticipate?
Yeah, they gave guidance on May 1st. For Q2, they expect net sales to grow somewhere between 7% and 11% year over year. That translates to roughly $159 billion to $164 billion in sales.
Okay, 7 to 11% growth. And operating income.
They're projecting operating income between $13.0 billion and $17.5 billion. For comparison, it was $14.7 billion in Q2 of 2024.
So potentially flat to up significantly.
Right. And importantly, they mentioned this guidance includes an unfavorable impact from foreign exchange rates.
So the underlying business might actually be a bit stronger than those numbers suggest.
Could be, yeah. It gives investors valuable context for setting their near-term expectations.
Okay, nearly there. Lastly, the 10Q always talks about risks, market risks, legal issues. These things can definitely move a stock. Any key takeaways for investors there?
Yeah, they cover the usual suspects, market risks like interest rate changes, foreign currency swings, which they noted particularly impacts the international segment's results.
Right.
And also the volatility in the value of their equity investments, like Rivian and those private companies we talked about. And then there's the legal and regulatory side.
Always a factor for big tech.
Always. They mention ongoing things like the appeal of that decision in Luxembourg, plus various other claims around IP, taxes, competition. These things can have unpredictable financial impacts down the line, so investors need to keep them on their radar as part of the overall risk picture.
Okay. So wrapping it all up, it sounds like Amazon's Q1 2025 report showed pretty strong growth, impressive profit jump, especially driven by AWS and maybe those newer revenue streams like ads. But investors also need to balance that against things like that big ramp up in spending, the CapEx, and these external market and regulatory risks. Is that a fair summary?
I think that's exactly right. This kind of deep dive into the 10Q, it really gives you, as an investor, a much fuller picture than just the headlines. The strong revenue, the big net income increase, AWS firing on all cylinders, those are definite positives. But yeah, you have to weigh that against the strategic choice to pour billions into CapEx, which is aimed at long-term growth, sure, and those ever-present market and legal risks. It's about having that balanced view.
So maybe the big question for you, the listener, to think about is this. Considering these trends, the continued strength of AWS, these big strategic bets on future tech like AI, how do you see all these pieces fitting together? How might they shape Amazon's long-term value and its performance in the market? It's definitely a complex picture. Maybe take some time, mull it over, and perhaps even dig into the full 10Q report yourself if you want the deepest possible understanding. Thanks for joining us for this deep dive today.